and welcome. It's another half hour of markets, insights and analysis on business incorporated live from Channels Television. Here's what's coming up on the program. Gabon dollar-denominated bonds slide after army says it seized power. And Kenyans to pay 3% tax on sale of digital assets. And in Nigeria, manufacturers' confidence slides further in the second quarter of this year. Welcome again to the program. I am Will Ibong. Let's kick off with the markets. First up, major equities in Africa. At intraday, major equities were trading with positive sentiments. With negative sentiments, we see Nigeria's NGX down 0.22%. Still, well, dropped from that 15-year highs, now at 66,293. We see South Africa also trading with similar margins, 0.24% down. Egypt also down at intraday. We see it 0.17% down at intraday, and except for Kenya, who traded up yesterday's trading session, closed Wednesday session in positive territory. Now let's see to the Middle East now, where it was mixed sentiments at intraday. The Abu Dhabi was up 0.49%. We see that on the screen there. We see Dubai also trading slightly up at intraday, 0.09%. Elsewhere in Saudi Arabia, we see it down at intraday, 0.23%. And the Qatar index also down 0.7%. Now, a new earnings report from UBS is showing exactly how it absorbed its former rival, Credit Suisse, and that is the emergency takeover earlier this year. For more, let's talk to Cassandra Sant in Berlin. Cassandra, what are the takeaways from the first earnings since the takeover was completed?
Thanks for having me, Will. Yes, while it's only been 2.5 months since that deal closed in June, there's a few insights we can gain here. Now, remember, UBS was strong-armed into a $3 billion takeover of its closest domestic rival, and that was to make sure that Credit Suisse didn't go under. And this quarterly report was actually delayed since there were so many moving parts as these two companies combined. Now, this mega merger that some have called an arranged marriage seems to be working so far. Strong results for UBS, who posted a $29.2 billion profit, while Credit Suisse, on the other hand, saw a $10.1 billion loss over that same period. One thing that investors and employees have been eagerly wanting to know is the fate of Credit Suisse's Swiss division. Would it continue to operate independently in the long term? Well, turns out no. It looks like UBS will be absorbing that business over time. The two Swiss entities will operate separately until their planned legal integration for 2024, with the full migration of clients expected in 2025. UBS has also said it will be cutting around 3,000 jobs in Switzerland as it looks to cut costs as the merger matures.
Well, UBS actually beat profit expectations for the second quarter of this year. How did that happen?
That's right. Analysts had projected a net profit of $12.8 billion for the period between April and June, but the second quarter profit was more than double that. Two clues to how that happened seems to be that UBS saw $29 billion in what's called negative goodwill, which is also known as bargain purchase gain. And all that essentially means that when a company buys a high value asset really cheaply, and that, of course, was due to the impending crisis at Credit Suisse, which was exactly what happened here. The company was facing lots of problems, which is why it was sold at bargain basement prices. The other clue here to some of these profits is the Global Wealth Management Division at UBS saw its highest second quarter net new money in over a decade. They're expecting that momentum to continue into the third quarter of this year.
So what are investors looking for in the markets today?
Right. European shares did get a lift on this UBS news, especially the financials. Shares for the UBS group gained 6.3%, their highest level since late 2008. The broader financial services index added about 1.5 points. The pan-European stocks 600 edged up higher. The London FTSE 100 index dipped 0.1%. In the Eurozone, the Frankfurt DAX gained 0.3%, while the Paris CAC 40 lost 0.1%. Now, Asian stock markets were mostly lower today following news that Japanese factory activity and Chinese service industry growth had weakened. Shanghai, Hong Kong, and Seoul all declined, though Tokyo gained. Oil prices are also edged lower.
Thanks a lot, Cassandra. Cassandra Sands there from Berlin. Now we go to the UK, where British high street retail chain Wilko is expected to begin job cuts this week after a surprise £90 million bid for the discount retailer fell through. We're going to be speaking to Juliana in London. Good afternoon, Juliana. Tell us what went wrong there.
Good afternoon. Well, as you said, some devastating news developing out of the City of London this afternoon, which is that M2 Capital, which was hopefully going to take over Wilko, that deal has collapsed. That was the update from PricewaterhouseCoopers, who, of course, a couple of weeks ago were brought in to try and find a rescue deal for this century-old high street retailer. It was a couple of weeks ago that it was announced that Wilko was going to be falling into administration, putting at least 12,500 jobs at risk. PwC were brought in, and it did appear as if there were several bidders that were trying to at least save the intellectual property of the brand, and M2 Capital was the top bidder. I think they put in about £90 million worth of the bid a couple of weeks ago. But I think once PwC scratched beneath the surface, they weren't certain that M2 Capital actually had the funds that they were proposing to keep Wilko afloat. So what does that mean? It basically means that within the next 7 days, at least 269 staff will be made redundant. We're not sure what the fate is for the thousands of other staff who are, of course, waiting on tenterhooks to see whether or not they are able to keep their position. But, we've been discussing the British High Street for a couple of years now, even before the pandemic. This is a familiar story. But as we said, M2 Capital, who were to take over from Wilko, that deal has officially been closed by PricewaterhouseCoopers.
It's quite devastating, as you've mentioned, devastating story, especially as this puts food on many people's tables. A lot of people's jobs are going to be at risk here. They're going to lose their jobs, money to feed the families at this excruciating time, especially with high prices, is not something we'd want to think about. But just looking at something else that's developing there in the UK, we see the energy regulator banning excessive profits made via market loophole. What's the backstory here?
I've got to say, Will, this is a very complicated backstory. It's taken Ofgem, the energy regulator, about 9 months for them to get their head round. So it's going to be difficult for me to do this in a couple of minutes. But as you say, the headline is that the energy regulator in the UK has been determined after an 8-month probe to kind of close this loophole within the energy market. What this loophole is in relation to the balancing market won't be familiar to most of our audience, but it's basically a mechanism that stops and prevents there being more supply of energy than there is an actual demand. Now, typically what would happen in a normal year is that it would cost the energy regulator, which obviously trickles down to households, about £500 million. Alas, they were alarmed when they got a bill last year of about £1.5 billion. Granted that, of course, last winter the geopolitical situation and the energy market was completely off the scales. But when they had a look, Ofgem, at what exactly was taking place, they realised that some unscrupulous regulators were basically charging much more through the Balancing Act. I wish I would be able to explain it much more. Ofgem have released a statement which is available online, but really it is about the British government and the Treasury, as well as the stakeholders, just cracking down when we're going through a pretty serious cost of living crisis and making sure that big corporate organisations are not profiteering off the back of beleaguered households who are obviously facing pretty significant bills at the moment.
It's sad to know that people still profit from other people's misery, Juliana, but how are markets doing at intraday? You tell us, good or bad?
Yeah, the markets are doing pretty well. I think it's probably worth giving an update on the biggest breaking news story out of London at the moment, which is, of course, the fact that the former Defence Secretary, longest-serving Conservative Defence Minister Ben Wallace has stepped down with immediate effect, and Grant Shapps has taken over. This obviously has major ramifications, not just here in the UK, but of course across Europe and in Africa, considering there are significant military movements going across the continent, particularly around the region of Nigeria. There does appear to have been a positive market reaction to that, considering that Grant Shapps has delivered a statement saying that he will follow alongside Ben Wallace's regime of making sure Ukraine is defended to the hilt. We also got some updates from the car production, the Society of Motor and Manufacturers, saying that car production is up for a 6th month in a row. That's great news out of Britain. And there was a separate survey conducted in the survey showing that business confidence is at an 18-month high. Looking at the numbers more closely, the all-share is up 0.06% at intraday. The FTSE 100 is up by 0.02%, and the FTSE 250, the domestic market, up to at 0.35%. In the currencies market, the British pound is currently trading down, though, against the US dollar by 0.21%, though up against the euro by 0.35%, and down against the Japanese yen at intraday by 0.33%.
Thanks a lot, Juliana, for that update. Now we move over to the U.S., where S&P 500 futures were flat Thursday after Wall Street notched its 4th straight day of gains. Futures for the S&P 500 rose marginally, while Dow Jones Industrial Average futures gained 0.35%. We'll see the Nasdaq futures falling down there 0.1%. Not great for intraday trading, but traders are also digesting a Salesforce earning beat. Shares advanced more than 5% in pre-market trading after the software company announced fiscal 2nd quarter results and 3rd quarter guidance Wednesday that exceeded analyst expectations. Now we go over to Gabon now, where yesterday a group of senior military officers in the Central African nation announced that they are taking control minutes after the state election body announced that President Ali Bongo had won a 3rd term. Now, this coup d'etat led to the closure of the country's border with neighboring countries. But to get the current situation of things, we spoke earlier today to Innocent Mbadouma, a business journalist in Libreville, Gabon. And let's take a listen to what he had to say.
Matin, quand il y a eu le coup d'État, effectivement, les entreprises.
When the coup took place yesterday morning, companies were afraid and some employers asked their employees to stay back at home. Many were scared of the damages a coup might have on businesses. So shops remained closed. It was not until midday that businesses began to open to customers. The army have asked business owners to resume work today as economic activities should not be halted. So it was yesterday when there was panic because of the coup that businesses were shut down, but starting from this morning, businesses are open as the military has clearly directed workers to return to their places of work.
Que l'activité économique ne devait pas être bloquée.
Now, still in Gabon, the Gabon's military coup sparked the steepest daily drop in its dollar bonds on Wednesday since the height of the COVID-19 pandemic, and came just weeks after the country carried out continental Africa's first debt for nature swap. The country's bond due for the repayment in 2025 fell the most by as much as 14 cents before recovering to end the day down almost 8.5 cents on the dollar at 85 cents. That was still the biggest fall since the initial COVID-19 market rout of March 2020. Its two 2031 maturities both finished down around 7 cents at 74 cents, or a quarter below their original face value. Now, the coup, which if successful would be the 8th in Africa and Central Africa since 2020, and could exacerbate already poor access to finance for countries on the continent. Next, updates from the commodities market space. Stay tuned. This is Business Incorporated. Welcome back. Now we are going now to Nigeria, where recently the price of rice has increased to its highest level this year, reaching 61,000 naira for a bag, a kilogram, in August. We're going to be talking to Miriam Ode, analyst with Financial Derivatives Company. She joins us virtually to give us the updates on this. Spike. Miriam, is this spike in the domestic price of rice solely because of India's ban on its rice exports, or are there other factors that are supporting this price increase?
Good afternoon, Will. Thank you for having me. So yes, the India's ban on its export of rice is actually one factor that is contributing to the recent increase in the domestic price of rice that we're seeing. But it's not the only factor. Other factors such as Naira's devaluation, the shutdown of local rice millers in the country, and also export restrictions from neighboring countries like Niger and Benin Republic are also adding additional pressure on the domestic price of rice. However, in the near term, we expect to see the domestic price of rice actually taper due to India's agreement to release the rice that were previously shipped before the ban but were trapped at its border. So this would increase the global supply of rice in the near term and would also exert downward pressure on both the global and domestic price of rice.
Miriam, you know, rice is really very important for us Nigerians, mostly our staple food here in the country. I don't want to be not eating rice because it's too expensive. We did see the federal government, you know, last year, you know, with its Anchors Borers program, and you saw it investing in local production of rice. We also saw that unveiling of the pyramid, the rice pyramid, but still we have a deficit, the supply deficit of about 2.66 million metric tons. What lies ahead for domestic production of rice in the country, and what limitations, what challenges are we still facing as a country to be able to meet up with domestic supply?
So to answer this question, I would like to start with the fact that farmers in the rice industry in Nigeria are actually small-scale farmers who do not have access to the required machinery needed to improve or even increase their supply or production of rice. So this is one of the challenges that are faced by farmers in this industry. Also, the high level of insecurity, especially in the north, where most of this rice is actually cultivated and produced, is denying farmers access to their output or to their crop yield, and is not allowing them to export whatever they have harvested or produced to the market. So this is another challenge that farmers in this industry are facing. And let's not forget the issue of climate change. Last year, that was in 2022, we saw severe floods damage farmlands across the nation and across the 36 states. And just recently, the National Emergency Management Agency has told Nigerians to brace for more floods due to Cameroon's decision to reopen the Lagdo dam. So we can see all these factors are influencing or are constricting domestic supply of rice. But we're seeing increased intervention from the government to encourage domestic production, and this could help the industry and increase domestic supply in the long run.
You mentioned climate change in the production of rice, but we do know that globally that is estimated, rice production is estimated to account for 12% of global methane emissions. Given this increasing global awareness of the need to combat climate change, do you believe there are viable, environmentally friendly approaches to sustain rice production, and how easily do you envision these methods being adopted in Nigeria?
Yes, there are some environmental friendly methods or practices that could be used instead of the mostly used method, which is the flooding method. And although it is good in curbing the spread of unwanted plants, that's weed, it has a negative impact on the environment, as too much water encourages the production of a harmful gas, which is called methane, as you mentioned. But also, surprisingly, too little water also encourages the production of another harmful gas, which is nitrous oxide. So farmers have to take into account this factor and try to adopt precision agriculture, which is the use of technology to precisely measure resources such as water, fertilizers, and also pesticides. This would reduce the negative impact on the environment. Also, farmers can also adopt the use of introducing or planting trees at their paddy farms, which would serve as a habitat for beneficial organisms, which would now give nutrients to the soil and increase soil fertilities. But like I mentioned before, the rice industry is plagued with several challenges, and this could actually reduce the adoption rate of these environmental friendly practices. But with the recent efforts by the government and also the awareness made by the government, we can see the adoption rate increasing slowly over the years.
We do hope this adoption rate, is accelerated, especially with production of rice, because Christmas is around the corner and we do need our rice to celebrate. Thank you so much, Miriam O'Day, analyst with Financial Derivatives Company, for sharing your perspective on the program. Now, still in Nigeria, survey shows that manufacturers' confidence has dropped in the second quarter of this year, as more than 63% of manufacturers under the aegis of the Manufacturers Association of Nigeria, MAN, says capital expenditure by the government does not encourage productivity. According to this report, MAN's aggregate index score of MCCI in second quarter of 2023 declined by 1.4 points to 52.7 points, from 54.1 points, which we saw in the first quarter of this year, which is also 2.3 points less than 55 points recorded in the fourth quarter of 2022. High cost of energy was top on the list for the major manufacturing challenges. Now we'll move on to Kenya, where Kenyans will be required to pay a tax of 3% from revenue they make by selling digital assets. That's a big one. It's effective Friday, September the 1st this year, following the introduction of the Finance Act 2023. Now, the digital tax covers a vast array of assets, including e-books, photos, documents, videos, social media accounts, cryptocurrencies, as well as non-fungible tokens. According to the Act, digital assets sold is to be remitted to the Kenya Revenue Authority, KRA, within the 5 working days. Now, former Deputy President of the Republic of South Africa, Mzuli Malambo Nkuga, says Africa should not accept to be exploited. She added that the continent has the potential to become a major economic role player in the global economy. The minister said, while speaking at the African Critical Minerals Summit in Johannesburg, South Africa, says the summit brings together the key stakeholders, industry experts, policymakers, and investors to explore opportunities, foster collaboration, and promote sustainable mining practices. Our correspondent, Innocent Samosa, reports.
Africa holds 30% of the world's mineral resources. However, respective mineral resources departments face challenges such as illegal mining, environmental concerns, labor disputes, and economic fluctuations affecting commodity prices. These issues are impacting the sustainable management and development of the continent's mineral resources. Welcome to Africa's Critical Minerals Summit. The discussions here is centered around embracing Africa's wealth and defining the path for critical and strategic minerals for the continent. South Africa's Minister of Minerals, Gwede Mantashe, advocates for the unity of the African continent.
We further submit that Africa must unite and collectively develop and uphold its industrialization strategy, rooted in the utilization of mineral resources endowment to transform African economies.
Former Deputy President of the Republic of South Africa, Phumzile Mlambo-Ngcuka, says Africa should not accept to be exploited.
In this new narrative, there is no place, or should I say, we should not accept to be exploited. We should not accept any corruption, our own and any other corruption.
48.1% of critical minerals that the world cannot do without are in Congo. Meanwhile, Namibia just discovered oil. The Deputy Minister of Mining of Namibia, Cornelia Shilunga, says there's a need for collaboration and coordination within the SADC region.
In the region, we really need to collaborate. Before we collaborate with any other developed countries, for example, let us collaborate within Africa. What we cannot find in Africa, we can then look for it outside Africa.
The long-standing issue has been the illegal mining, locally known as the Zamazamas. Is there a commitment from the South African government to resolve this challenge? And what will it take to allow a small-scale mining sector?
Currently, our government, through the Department of Mineral Resources and Energy, are actually committed to working through a process where you can have a differentiation between what we call illegal miners as well as the artisanal mining.
Some participants say the summit should be more than just a congregation of minds, but should yield desirable results, especially for women in the mining sector.
I'm hoping out of this conference we talk about change, practical change, and not just conversation, but conversation that would lead us to adopting and enforcing policies that would allow us as local African companies to own, the production, to own the exploration, to own the processing, to own the land.
The first day of the summit was rounded off by the Botswana Cultural Dance. From Johannesburg, South Africa, Innocent Simos, Channels Television News.
And that's a wrap on Business Incorporated. Join us tomorrow for another edition of the program. I am Will Ibang. Bye for now.